Can you double click on that? 4% of the float. What does that mean?
Double click. I like this. It's like I'm in the 90s.
Well, they're gonna buy Tesla.
At least 20. Yeah, it's gonna be SpaceX AI slug. It's gonna be that. There are a lot of strategies that you can use to diversify, to hedge, to reduce your taxable situation.
You have to think about your situation first.
The retail investor has propped up Elon's career for a long time.
They just are willing to give stories more leeway, right?
Yeah.
If Siri actually delivers,
don't do it.
Don't do it.
Don't do it.
Don't do it.
I've been saying if Siri delivers since 2013, I think.
Oh, yeah.
Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor. All right, welcome to another episode of Future Money, where we talk about the investments of the future
that will make us money.
All right, so I'm not sure what's the more exciting place to start, which is SpaceX IPO or World Cup.
World Cup for sure.
Definitely the World Cup.
Yeah.
I disagree. For me, SpaceX is the World Cup. But no, the World Cup has been amazing.
It is the World Cup of finance.
Yeah.
I mean,
for sure.
Yeah. Well, today we'll talk a little bit. I mean, I think the subjects around the office right now are really these IPOs. The World Cup being really kind of the most fun thing happening, especially in LA right now and all over the country. Also, like, these markets, right? We had an Iran deal last week, so we'll talk a little bit about what's happened there and really why these markets are keep, chugging higher.
Higher.
Yeah, even though there's all these negative news happening, inflation. We have a new Fed chair this week. We
got an iPhone price hike. Also big news today.
iPhone price hike.
Yeah, we'll talk about that too.
So yeah, we'll
got a lot of stuff.
A lot of stuff.
So let's start with the fun stuff. Let's start with the World Cup. I know you're obviously. I
think we should start about the USA. Going into this World
America,
Cup.
let's go.
Yeah. Going to this World Cup. There was a lot of doubt. Are these American kids going to show up? America sucks at football or soccer, if you want to call it. And honestly, they showed up. First game against Paraguay.
Killed it.
One of the best. It was in LA here at SoFi. It was one of the best games the U.S. has ever played.
It was so good and easily could have been like 6-1 versus 4-1.
Yeah, confidence, team. The U.S. has a new coach, Pochettino, who's Argentinian. And
it always helps to go out and get an Argentinian.
Coach, No, I think the criticism is we've never had a really good coach in the U.S. And the last World Cup in 1994, the U.S. team was just not up to par.
I mean, having been in the U.S. in 1994, I was 12.
Yeah,
I could tell you with very great certainty that maybe 1% of society played and or watched soccer in the U.S. in 1994.
Yeah.
So the numbers are definitely way higher now.
Like 16 million people watched that game.
Yeah. So you said the highest viewership in the U.S. of all time.
Highest viewership of the U.S.
Yeah.
The Knicks, 20 million people watched the Knicks finals.
Yeah.
That is a pretty amazing number to think about it that way, right?
So that's great. I mean, the U.S. has been obviously behind in the World Cup for many reasons.
Yeah.
One being what I just said, which was nobody here was into soccer, so why would we put any money into it?
Gerber Kawasaki is different.
First of all, I was talking about 1994 and all the stuff leading up to now.
Right.
But soccer has become a lot more popular in the U.S., I would say, over the last decade, really, with,
Well, a lot of these kids play in Europe.
Yes,
right?
Of course.
So, most of them are born here, but a lot of them have foreign parents or have played in Europe for a long time. But I think being in LA and Gerber Kawasaki being a very diverse firm that speaks 10 languages or something. We have Brazilians and French, Tunisian,
Israeli.
German, Israeli,
even though they're terrible
Portuguese.
in the World Cup. That's my people. I don't think
they made it. You guys are really good.
We've never made it.
You guys are really good at other stuff.
Israel's actually really good at basketball. You would not think that.
That's right. That's right.
The Maccabi Tel Aviv in Israel has won a bunch of like FIBA basketball world championships. So not what you would expect from the Israeli team, but for some reason they're very good.
Yeah, there you go.
But I will say this. I think from a business standpoint, as far as like my sort of
hypothesis on soccer becoming, more dominant in the U.S. and the U.S. continuing to become a world stage player in soccer is this. Number one, like it's becoming a lot more popular. There's a lot more money behind it. You're an LAFC fan here,
I'm a
right?
huge LAFC fan, yeah.
Well, what are the ticket prices when you bought tickets versus today? What are the ticket prices?
Since we got Son, who's a Korean superstar, the tickets doubled, tripled maybe, and also the demographics of the stadium doubled.
Correct.
So many Koreans now coming into the stadium. Like it's such a you bring in all these big players from Messi to Son to a lot of other players and
that's what I was going to say. Like, we know that the U.S. has the capital to create greatness ultimately, right?
Yep.
The money's here.
Yep.
And you look at the deal that Messi struck with Inter Miami, with Apple TV.
Oh, it's insane.
Right?
Adidas, everyone.
They have all this money now coming in, and the big streamers, right, can cash in on this. So they have deep pockets, the ones that Europe can't really fill.
Yeah.
And so I think as we get more of these superstar players coming here from Europe, from South America, like you talk about Messi, he came here at the end of his career or whatever. The dude just had a hat trick in the World Cup. You know what I mean?
He's legit.
So can you imagine an 18-year-old playing for Inter Miami and Messi's there?
David Beckham started this with the Galaxy many years ago.
And my brother actually worked for Adidas. When David Beckham, he worked for Adidas and was basically in charge of the partnership that brought him here.
So I think America is a next frontier for football. I think we could talk a lot more about this. I don't think this is a podcast for that.
Well, it's a business conversation.
It's a business. The business is really you're right. Like this is a sport that has a lot more upside. LAFC valuation went from $100 million when he started 6 years ago to almost $1 billion right now.
Right, 10x in 6 years, right? Like that speaks in and of itself.
Yeah,
right?
This is true for a lot of sports franchises, but these, the MLS franchise is going up.
Yeah,
but the World Cup also is another league on itself.
Of course,
I think a lot of people were wondering if the political environment, America being anti-immigrant, really doesn't have the best image right now globally, will allow a lot of people to come into the country. Yeah, and we saw the stadiums; they're all full. For sure, we heard some issues. The Uruguayan teams unfortunately got stopped by immigration with dog sniffing. Whatever.
Drones around the Iranian team.
The Iranian team is really an amazing story, right?
Yeah.
But they got kicked. Amazing showing, right? 2-2 first game, but they got kicked out of the country 2 hours after the game.
Yeah, they had to go straight to Mexico.
Yeah, which is messed up. So there's a lot of those kind of underlying unfortunate events around this stuff. But I think the exuberance, the joy of seeing teams compete and really coming together, and really that's the energy.
And the beauty of the World Cup is that it's about football, it's about the countries, not about the politics of the countries. I think is what comes forward. As I told you, I find myself, I'm dating a Persian girl. I'm rooting for Iran. What, how many Israelis did you think are rooting for Iran?
That's awesome.
Yeah, because Iran is not, the Ayatollah. You know what I mean?
That's exactly
they're a bunch of people who are just trying to play soccer.
And that's exactly it.
And so it's great. It creates this unifying force in spite of many of the countries having terrible...
despite FIFA being corrupt. Despite all
for sure.
It brings us all together. We all can kind of coalesce around this really beautiful thing, which is a game of football and really competing, right?
Yeah, and it's going great across the country, across all three countries that are hosting it. Everything's been... the thing about the U.S., compared to other countries when we host events like this is we have the infrastructure across the board to support it.
Unless you're trying to buy some tickets.
Unless you're not, well, yes. But what I'm saying is we have so many stadiums, large.
We don't have to build new infrastructure.
And that's the same will be the case for when the Olympics come here. Yeah. Right. Is we have all the infrastructure in place, and it's a great.
I'm sure we're gonna get some emails or messages around how expensive the tickets are.
Oh, they're crazy expensive.
They are insane. I was looking to go to the U.S. game on Thursday against Turkey, which thank you, Matt, for getting me some tickets. They are good tickets are $3,000 to $5,000. That's insane. It's And you talk about like how demand works, right? And FIFA is so corrupt. Like we can have literally a whole hour talking about how messed up their whole ticketing system is. But the reality is the demand is there.
The demand is there.
I think I saw somewhere that we have almost 2 million people visiting the U.S. just to watch the World Cup. That's a big number,
for sure.
Despite tourism being down quite a bit. So I think it's going to be an economic boost to the. I saw numbers as big as $20 billion of economic impact on the World Cup here. So it's a massive thing. Venice is clean. There's a fan zone in Venice. Yeah, go watch it. Like it's a
Penmar in Venice is the official U.S. watching.
Yeah, and the France official fan.
At Penmar too.
Yeah, Penmar.
Oh man,
there was like 300 French people in front of my house last week. It was great.
All right, Hatem, we're gonna have you make a bold prediction before we move on to our next topic. And we'll talk about. So you were showing me that Goldman Sachs is basically turned into Kalchi at this point, and has all these World Cup predictions.
It is an official daily report around the probabilities of win of each country with graphs and really actually awesome fun research.
Yeah,
and I'm gonna say as today is June 18th, the U.S. actually has a 96% chance of making it to the round of 32.
Oh, yeah.
It's like, according to Goldman.
Okay. What are our chances?
61% chance to the round of 16.
Wow.
30% chance to the quarterfinals. If the U.S. makes the quarterfinals, it's a massive win.
For sure.
Yeah.
I mean, they made the quarterfinals two World Cups ago.
Yeah, they did.
And then they got thumped by the Netherlands, I think.
Correct.
Or Belgium, I think, at the
Belgium.
time. Yeah.
And then 12% chance semifinals, for 3.7% final, and 1.2% chance of winning it all.
So what you're saying is I should make a bet on the U.S. winning.
I mean, that's good. I mean, I'm going to take my only bet, an easy bet, France winning it all.
Yeah, always a good bet.
We were finalists last year against Argentina, and we lost in PKs. It's okay. PKs.
It's so tough to lose in a PK. As a spectator and somebody who's not, like, if your team is not playing in PKs, like, it's so fun to watch. Yeah. But it's gotta be so rough to lose a finals game in PKs.
It's a valiant showing. Yeah. And when it gets to PKs, anybody's game.
For sure. Really it's nerves. Like literally like one accidental turn the other way.
It's nerves. It's a lot of,
Yeah.
But yeah, it's exciting. The U.S.
So you're sticking with France?
I'm sticking with France, 100%.
You know what?
I hope the USA makes it to the semifinals.
I also heard that if the stars align, there could be a match on July 4th.
Oh, yeah?
For the U.S. versus England.
Ooh.
In Philadelphia.
Oh, no way.
It's basically the American Revolution 250 years later.
Man, wouldn't that be epic?
It would be amazing if the U.S. won. The city of Philadelphia might burn to the ground.
I think so.
But like what?
Or if they lose. Either way.
Yeah, it would burn either for happy or sad reasons.
Either way, yeah.
But it would be such a cool
fans,
It would be such a cool outcome if that actually did happen.
Oh man!
Just for historical purposes, and this is the 250-year anniversary of the Declaration of Independence.
That would be epic.
It is so good.
That would be epic. Anyhow, we don't want to talk just about the World Cup, but
I'm taking the U.S.
I'll give you GK
100 to 1 odds.
100 to 1 odds. That's exactly it. France 5 to 1 odds. So.
Okay.
Yeah.
Are they the highest odds right now?
Spain is the highest one.
Spain was a 0-0 game against
Cape Verde.
Cape Verde, which I 90% of people couldn't find on a map when I asked them.
Yep. I still can't.
Had no idea what it was.
Yeah.
And they tied the favorites 0-0.
It wasn't. That's just what the World Cup does,
Yeah.
And this is, you show up. It's the biggest stage of anybody's life.
Yeah.
And you can become a hero or a villain, So,
yeah. And this is the part for Americans that bothers us in the group stage. A lot of us feel that when you're a favorite, you score like one goal and you kind of mail it in because you're like, I'll make it through the group stage. It'll be fine. And everything ends in a 0-0 or 1-1 tie, basically.
No.
It's points. I get it. they all, they're just playing to get 3 or 1 point and just make it out of the
listen,
group
it's
stage.
like baseball. There is a lot of nuance. Spend some time understanding the group.
And baseball, every game has a winner.
Yeah.
I want to make that clear. Every game has a winner. There are no ties.
But there is a lot of nuance around strategies and the
I
ties
get
and
it.
the point system.
I understand the point system. And Europeans think we're crazy because in the U.S., our sports are like the regular season, and then you make it to the playoffs. Nothing that happened in the regular season matters. It's just a playoff.
Right.
And Europeans are like, what? Because if you watch English Premier League, for example, right, it's whoever has the most points at the end of the season wins, and then there's no playoff. And you're like, wait, that's it?
That's exactly it.
So,
at least in the point system, every match matters.
Every match matters, and I get that, but there still should be a playoff.
Right.
Anyway, that said, this is the European versus the American argument. It's live and vibrant here at Future Money. So with that said, let's switch topics to the second or first most exciting thing that happened last week.
Yeah,
other than
SpaceX IPO, man. Talk about execution.
Man, that SpaceX IPO was pretty.
Yeah.
They, we know they went, we did a whole show last month. We've done several shows on this now, but they went public at $135. That was a fixed price, which is not normal for IPOs. Stock popped to like 180 plus, 185.
Schwab said they had the day of the IPO, which is last Friday, was the 5th most active day of trading they've had in all ever. Think about what happened the last, 40 years or 50 years that Schwab has been around. You know?
That's a lot.
Yeah.
So there was a lot of movement, a lot of clients asking about it. Should I buy it? Should I not buy it? Still, for sure.
I think one thing to be cognizant of is when you say the IPO was started at $135, I got this question a lot.
Yeah.
Doesn't mean that you can buy it at $135.
You had to have actual IPO allocation price.
Which meant you have to have some inside track.
Correct.
Or to be part of the 30% of retail investors that requested shares. We requested some shares for some clients who really wanted to be part of it, and we had a very small allocation. Like we got 5% of what we wanted to get.
Because it was oversubscribed a lot. The retail investors got more than they wanted, and I really think this is Elon's strategy, right? Like Elon is he's like the man of the people. Like he knows that the retail investor has propped up Elon's career for a long time. Right? Tesla in particular, when institutions hated Tesla for a decade, the retail investors are really the people who helped prop up Tesla and keep it afloat, the stock at least, until the institutions got on board.
And there's a misconception that think sometimes that people think retail investors are stupid. They're not necessarily stupid.
They're definitely not stupid.
They just are willing to give stories more leeway, right?
Yeah.
They're not as data driven as more like they love a story.
Yeah.
And Elon's story with, first of all, converting a SpaceX, which is a space company, into an AI company in the space of 6 months.
Yeah.
Pretty insane.
Yeah. I mean, he said it. I don't know if they're actually doing it yet. I could say that on tomorrow. Like,
he's doing it. He owns
Albert said it too.
Oh, I know he's doing it.
I know.
Anthropic is paying them $1.5 billion a month for
leasing their computer. Yeah,
Google. You know what I mean? Like it's legit. These are real revenues.
They are definitely real revenues. I think there's going to be more of that as time comes. But ultimately, like the execution was great.
Yeah,
they raised the $75 billion, which was basically like 4% of the float. The stock basically hit.
Can you double click on that? 4% of the float. What does that mean?
Double click. I like this. This is like I'm in the 90s. So all the share count is 100% of the share count, right? When a company goes public, we talked about this a few times, they only release a small amount of the shares to the public when you're releasing it. In SpaceX's case, it was even less than usual. Normally, it's around 10 to 20%.
Yeah.
Right? SpaceX's allocation was roughly 4%.
Right.
So that means there's a very small amount of shares that are being chased by a lot of people.
Yeah.
So
very classic supply and demand,
economics 101, right?
Yeah.
You have a ton, probably the most hype behind a stock IPO ever.
Yep.
And the smallest amount of supply of a stock ever.
Yeah.
Or maybe not ever, but close to it. That means higher price initially.
Yeah.
Now, what happens after that remains to be seen. We've already seen, we're shooting this on June 18th.
Yep.
We've seen the stock go from $135, which was the IPO price, closed around 160, 165, I think, on the first day.
Yep.
The beginning of this week, the stock went over 220.
It's insane.
And I know because people were texting me, dude, do you see what's happening?
Yep.
Friends were texting me. And now we're back to like 170.
This conversation is in every group message.
Yeah. Oh, yeah.
Everywhere I go, people are asking me. So
stock is at 170-ish now. And we're seeing kind of the classic pattern so far. We don't know if it's going to continue. But we have an interesting lockup schedule for Tesla, for SpaceX. Why do I keep saying this? For SpaceX.
Why they're going to buy Tesla.
At least 20. Yeah, it's going to be SpaceX AI SLA is going to be that. But at this point, we have a lockup expiring in the first one. And
we talked about this before, right? Like there is a lot of employees that worked at SpaceX for many, many years who have a ton of stock, who need to have some liquidity.
Yeah.
And that lockup means when can they sell? The employees and also early investors, GK is one of them, is going to trying to sell some shares at some point, but there's a lockup. They can't do it right away.
Correct.
So what's going to happen is more supply, as you said, there's only 4% of stock was sold. There's more supply of stock that's going to come into the market.
Yeah.
And you add the fact that the indexes are going to add SpaceX to the NASDAQ.
Yeah, right now just the NASDAQ, And we talked about this last time, but I want to recap something that I don't think we covered last time, which is the NASDAQ ruling, which we only found out recently. Not just the fast rule, but they basically, because of the small amount of share float that is available, the NASDAQ has a float adjusted number.
Yep.
So normally the NASDAQ, the S&P are just market cap weighting, meaning the companies that have the highest valuation have the highest weighting.
Yeah.
Right, so if Tesla's $2 trillion, it should be number 7, 8 in the whatever number it is.
It's actually number 5 now, dude. I mean,
well, not anymore. Not anymore. Now it's 170. At one point, it touched almost the valuation of Microsoft, which was like 2.8 trillion.
Microsoft makes almost $400 billion revenue, guys.
Yeah, so just so people know the difference. But the NASDAQ said because so few of the shares are trading, they're going to float adjust it, meaning it should have been a 5 or 6% weighting or whatever the number was. It's going to be a 1% weighting, essentially.
Yeah. Again, brilliantly set up this whole IPO, and kudos to Goldman Sachs and Morgan Stanley who ran the IPO.
Yep.
Because they were able to raise the money.
And execute the green shoe. We haven't talked about that yet.
Right, the green shoe. Talk about that.
So when a company goes public, sometimes they have an opportunity to basically raise more money if the stock stays above a certain price, which happened for SpaceX. So they raised another $11 billion on the green shoe, quote unquote.
Yeah.
And perfectly timed.
Yeah.
And then with all that, they used the high stock price for an acquisition. They were already ready to acquire this cursor company. They had the right to acquire it. We have some new information, actually, that we just found out this morning, that they're trying to possibly acquire Cursor. They are, or the right to it.
Yeah. They signed an LOI to buy Cursor for $60 billion.
And now they did a stock-only acquisition of Cursor, which is an agentic AI company, which
$60 billion for free.
$60 billion basically
free.
with just your shares, right? Just say, here you go. We have all these shares.
And just to see how brilliant this whole thing has been executed. Usually when you issue more stock to buy a company, you're actually diluting yourself, so your stock should go down. Actually, SpaceX went up 10% when that happened.
Yeah. And again, that moment, to be fair, we're back down to right around where they closed the first day at.
Yeah.
And it'll jump all over the place. The stock is, going to be hotly contested as people continue to buy more. The lockups are going to expire in tranches versus normally, which is 6 months, right? So the first lockup expiration is probably in August at some point.
Yeah.
We're talking 20% of employees' vested shares will be available. If the stock trades 30% above the IPO price, which is around 175. Yeah, well, so 175 would be the share price roughly. Then those employees can unlock another 10%, so 30% total.
Yep.
And then basically 7%
after that.
7% will basically kind of be monthly.
Yep.
Up until the full lockup expiration which will happen in December.
So it's a lot to be, what you're saying is a lot to remain to be seen over the next few weeks, few months, depending on how much lockups, how much stock comes into the market.
And what their earnings calls sound like.
Huge, right? Like it's again, when you're a public company versus a private company, it's just completely two different stories, right? So we have to see the first. We don't even know when the first earnings call. I guarantee you, that's probably going to be the most watched earnings call in maybe like a World Cup game, basically.
So it's great, but it was brilliantly executed. They did exactly what they wanted to do. And the interesting thing, all these investment banks helped take them public, and Morgan Stanley was where the shares were supposed to have been held. But in a last minute, under the wire switcheroo, Fidelity actually got the allocation of all the shares.
That is huge
for the employees, which
means basically $2 trillion in shares are actually
at Fidelity right now. So kind of crazy. Now, granted, Elon Musk owns 40-ish% of the company, so he's probably not selling a lot right now.
We're biased towards Fidelity. It's one of our main custodians. So
so that's good for our clients ultimately.
We love that
because we have a lot of clients at Fidelity.
Yeah.
So that's great. So the SpaceX IPO is great. What's on tap next?
Well, I think it's important to kind of separate the hype from the reality, which the reality is, as investors and financial advisors and asset allocators for our clients, right? It's great if you had SpaceX stock beforehand. It's great that you've been involved with the company. It's great if you're an employee, you made a ton of money, and your net worth has increased. It's important to understand that a lot of IPOs don't do as well the first year, right?
Correct.
For us, we're trying to separate that hype from the reality of a company that is worth $2.5 trillion right now. And despite how grandiose and beautiful and amazing the pictures and the S1s and the vision of Elon and all that, it's still a business that is barely doing, I don't know, $20 billion a year. That's still selling for $2 trillion.
Yeah, so we're still talking 100 times revenue. And again, the story's great, but when you mentioned the retail investor thing, retail investor is not dumb in any way, shape, or form. In fact, a lot of them are very smart.
Right.
It tends to be more of an emotional decision at that point versus looking at the actual metrics and saying, well, 100 times revenue might not even have a reference point for what the revenue is and what it should be.
Right.
So it's like, oh, SpaceX is amazing. I want to buy it. It's an amazing company.
Yeah.
Look at all the stuff they're doing that no one has ever done.
Yeah.
All accurate.
Yeah. And I heard this in a lot of the bro podcast, pro Elon things that, but in 5 years, in 10 years, this never would matter.
Maybe.
Sure. Maybe. I'll take that. That's a good argument. As an investor right now, I'm just not willing to pay 100 times sales for a business that I don't understand that well.
And again, we talked about this, right? 20 to 30 times sales is an expensive stock.
Yep.
100 times sales is, very, very expensive but again, amazing stuff that they're doing. So I know you have some data on post IPO and such.
Yep.
So tell us a little bit about it.
So, it's funny, like in the last 20 largest US IPOs by market caps in 2006, on average, they're all were down almost 60% after 12 months.
Yeah.
The drawdown.
Yeah.
Okay. And I can throw some names. Meta, down 53%. Rivian, 80%. Uber, 68%. Coupang, 65%. Now, listen, Meta has done really well since then. Rivian, not so much. Right?
Exactly.
So, it's really hard to know for sure what's going to happen. It's really going to depend on the execution.
Yeah.
When you become a public company, it's about show me.
Yeah.
What are you doing? How are you performing? What are your metrics? Where are your growth rates? Where are your margins? These are all very important things. So it's really important to kind of separate the story, the fantastical story pre-IPO to now. Every quarter, I'm going to see your numbers.
Correct. And I think, we have, for people who have highly concentrated stock positions, and we'll talk about Anthropic in a second also, there are a lot of strategies that you can use to diversify, to hedge, to reduce your taxable situation while you're diversifying. There's an entire toolbox, which is basically what I like, right? Because I got a lot of clients at SpaceX. I've been having these conversations nonstop for basically 3 months now.
Yeah. We'll get a little technical here because I think it's important. You have to think about your situation first.
Sure.
You know what I mean? There is a lot of things out there that are available. And those things, they all have positives and negatives, right? Yep. So maybe we'll go through a list of what's available for people.
Yeah, there's a lot of stuff that's available, right? So you can buy options. Now, granted, if you're inside the company right now, you can't do these things because those are prohibited transactions for people who are insiders in the company. But once the stock, if you leave
not according to Morgan Stanley.
Yeah, exactly. Well, we don't. But if you leave those companies, once your shares become liquid, you have the ability to hedge the position with options. Yeah. Meaning you want to, either generate some income. You can sell some calls to generate income against your position. If you want to protect the downside, you could buy puts. Yeah. That's a cost, though. You can do what's called a collar, which is do both. You kind of using the cost of selling a call and buying a put to zero each other out. Yep. And then ultimately you're hedging your position. Right. There's ways to unlock liquidity by also hedging as well, which is like what's called a variable prepaid forward. Yeah. If and when the time comes, there's something called an exchange fund where you can diversify into other assets after a holding period. That's nuanced, and we'll see if SpaceX. We're probably several months away from that. There's a lot of things you can do. You could just set up a systematic savings plan at the company. Divestment plan.
You could sell
the company. You could just sell, right? You could just sell right away. You could do direct indexing. You can do what are called long-short strategies to harvest losses.
Yeah, long-short strategies have become very, very famous right now. Which is basically what you're doing is because you're generating capital gains when you sell at a gain. Yeah, you basically invest in a long-short strategy, which is basically you use quant, basically electronic trading, to buy the S&P and short there's 500 names in the S&P, or could be other indexes. Yeah, you short some of the names that are going down, and you get positive on the name that are going up.
And you tax loss harvest the names that go down in the S&P too, even if you're long the S&P.
Correct.
Because in any given year, 20 or 30% of the companies could be down, even in an up year.
100%.
So all these strategies to help mitigate taxes. There's charitable things you can do, donor advised funds.
Those are the best.
Charitable remainder trust. Yeah. Right. So there is an entire toolbox here for people with concentrated stock positions to be able to sell, diversify. We even built a tool for our clients here at Gerber Kawasaki that will basically it's an interactive questionnaire that we use and say, what's important to you, diversification, downside protection.
Yeah, and I think the beauty of that tool is like, you don't have to do everything, right? But also you can do a mix of those things.
You can do a mix of a lot of things.
Yeah, based on your needs, right? Yeah. Like, and sometimes, like I had this conversation with someone this week, sometimes people are not charitably inclined. Right. But then if they think, hey, actually if I give money to charity, that helps kind of better my tax position, now actually I become charity inclined. I was like, actually, I really want to give some money away, right? So there's a lot of ways of thinking.
That's why charity, like these deductions for charities exist, right? Like, we all want to think we're very charitable humans, all of us. How many humans would be as charitable if the tax deduction wasn't in place? Yeah, probably less. I don't know the number.
I think I will disagree with that, because I think the more wealth you create, the more you want to give back. Like, generally, I know a lot of wealthy people who actually do want to give back.
I absolutely. I mean? So I would be interested.
The tax code helps.
I would be interested to know, and maybe there's someone who's done this research. If you took away the tax deduction, or even do a survey, if you took away the tax deduction, how many people, including wealthy, I'm not talking billionaires, like that's a specific, group of people. But if you took away the incentive to donate, how many people would do it? I bet it would be verifiably less. Than what we're
100% is going to be less. Yeah. But I don't think it's either or.
No, absolutely not. I do think, but it's a huge incentive for that. So the point is that you could do none of them. Yeah. If you want to just make your life simple, you pay taxes. Now, you live in California. Yeah. You sell SpaceX with basically a very low cost basis. You're paying 37% in capital gains.
By the way, SpaceX is in El Segundo, right? Like, they're down the street from us. Yeah. This is going to have a huge impact on real estate in LA.
For sure.
Manhattan Beach, Long Beach.
It's a huge
Palisades.
Good, move for real estate and I talked to a couple of my real estate clients who are hearing, people at SpaceX and all these companies are like,
I have clients there who are buying homes already. Yeah. Like, it's the reality is, again, a lot of these people worked really hard. Yeah. for many years, and they have families now. They have, goals and aspirations, and obviously they want to benefit from the wealth that's been created.
Sure.
So what does that mean? You want to buy homes, you want to travel, you want to buy Porsches or Ferraris.
Yeah,
or whatever.
it definitely creates economic activity, and this is the part that they're unlocking the 4,400 millionaires, or whatever the number was that came out. That is real economic impact. People think that these are just rich people. These are not rich people that just, this is, I think a lot of the times gets missed when millionaires are vilified because, they're not paying their fair share, blah, blah, blah. Like the people who work at SpaceX, the clients that I talk to are regular people.
They're normal people like
normal
us.
people who love their job, love their mission, didn't get into this job because they thought they were going to get $5 million out of it. But now they have it.
Yep.
And it's going to create a meaningful difference in their lives because they want to send their kids to college.
And it's going to trickle down.
Trickle down. And, a lot of, people who are left leaning will say, oh, trickle down economics don't really work. They might not reach the bottom half of society, and there is truth to that possibly, but it will have a meaningful economic impact on the city, on the places around us, on economic expansion.
And I don't want this to become a political discussion.
Not at all.
But this is why this billionaire tax that the SEIU, the union, wants to create is really dangerous, because what you're doing is you're vilifying success.
Correct.
Right? And what happens is you're pushing all of these companies and all these people to leave the state, which
is happening.
Yeah, which hurts our revenues, because these are, income generators. These are value creators who eventually have to pay taxes in California, which is the highest.
So just to give you an idea, there's people who work in California and in Texas and in Florida for SpaceX.
Yeah.
The people who sell in California have to pay 37.1%.
Mm-hmm.
Okay? That means that more than a third of their money gets lost to taxes.
Correct.
The people who live in Texas and Florida, 23.8.
Yeah.
Right? Because they have 20% federal gains, capital gains tax, plus the 3.8 net investment income tax. And that's it. When you talk about a
man,
I was in
Malibu yesterday, man.
Yeah.
It was such a gorgeous day.
Yeah.
You know what I
so
mean?
you pay 14% for that.
That's exactly, and actually I was hanging out with my buddy who lives in Texas.
Yeah.
And he lives in Dallas. He moved to Dallas because of taxes.
Yeah.
And he looked at me. He's like, "Shit, man, this place is so beautiful.
It's time to move back." Like, if you cash in your stock and then you move back.
Yeah.
But you think about it, right? On a $10 million stock sale, right? That's another $1.3 million that you owe to the state of California. And people think that taxes are the answer to everything.
No,
we keep raising taxes.
No,
we're in no better shape than we used to be.
Okay. We'll talk about the elections in November, because there's definitely some important things that our clients need to understand and we want to share with them. But we'll get to there.
So we moved on. SpaceX happened. We'll see what happens in the coming. It's going to be an exciting 6 months as the lockups expire.
Yep.
Next, we have Anthropic filed their confidential S1, right? So they're going public.
Yep.
Not determined when yet, but most likely in the fall, right? So that's what we're thinking. Maybe October-ish.
Another $1 trillion valuation.
Yeah. What's happening with Anthropic is great. And I am so excited to actually read their S1 because what's happened for Anthropic over the last year is something that the world has never seen.
Who makes Claude, right? Yeah. And we use it, right?
All the time.
Extensively here in the office, right? Honestly, one of the most amazing products ever created.
I just can't believe that 6 months ago, I didn't even know what Claude was.
Right.
And now it's such an integral part of my life that I cannot imagine not having it at this point. It's like when we got the internet and we're like, what did we do before? What did we do before the internet?
Yeah.
And the explosion in their numbers, like they went from 9 billion in revenue to almost 50 billion.
There's 1 billion users, man. It's crazy.
But not just 1 billion, because OpenAI, ChatGPT has, 1 billion users and they're still losing money as far as we know.
Yeah.
They're not profitable, but OpenAI went to immense profitability.
Yeah.
From 9 billion in revenue to 50 billion. You're talking about a company that the numbers jumped. And as far as being an attractive IPO, this one is very attractive just because of the explosion in the amount.
I can't wait.
Yeah. So I'm very excited to see their S1 when it drops, because their numbers are staggering right now.
Yeah.
And once again, another company that was an overnight success that took, this company started in 2021.
Yeah. I mean, it's ex-OpenAI.
But think about it, 5 years to get $1 trillion valuation.
Yeah, and $50 billion in revenue.
It's unreal. It's unreal and profitable as far as we know.
Yeah, so expect us to, once the S1 to come out, we'll definitely be doing a deep dive on that as well.
Yep.
But again, like, people ask me, are you buying? Are you not? Like, it's not an easy yes or no. Like, you have to look at all the things. You have to look at your risk tolerance. You have to look at, how much you have, how much you're willing to take.
Correct.
What's the market looking like? There's a lot.
And in general, again, our premise at Gerber Kawasaki is we don't buy IPOs for the reasons we've discussed already, because we want to wait for the time, for the lockups, for a couple of quarters of earnings so we can see, have transparency, see how the market digests everything.
Right.
And then we go from there. You're probably, as all the data show, you're probably, not for sure, but you're probably going to get a chance to buy it at a better price.
Patience rewards.
I don't know either. Patience rewards somebody.
What does Matt Damon say on that Bitcoin commercial? Fortune favors the brave. My dad said he listened to Matt Damon and lost all his money. Yes, everyone did, but they were brave in doing so.
Patience is a virtue? Let's go with that one. So those are the IPOs.
Success rewards the patient, I think.
Success rewards the patient? I don't know. We're gonna fact check
Alex,
our
can you find that for us?
Yeah. And then we have, OpenAI going public possibly at the end of the year, maybe next year. They haven't sort of like said exactly.
That's the race, right? Like who goes out first, right? Yeah. But I think a bigger thing for SpaceX is it's such a big part of the conversation. It really drives the market itself, right?
Yeah.
Like successful IPO, regardless of the valuation, regardless of everything that we talked about, successful IPO means the market momentum continues.
Correct.
Right?
People like what's going on.
Yeah.
And if you're believing Tesla, the total addressable market of AI, we haven't even begun to scratch the surface. If you believe SpaceX, $28.5 trillion total addressable market. We're just getting started, baby.
All right. I think we'll wrap her up there.
One last thing, because we did tease it in the beginning. We have going with all this stuff with SpaceX and Anthropic. What's happening right now is there's a huge memory crunch for training models, for memory in these large language models. It's affecting.
I thought you were going to talk
everyone.
about the Fed.
No, hang on. No, I don't care about the Fed. Yeah. That's the most boring topic to talk about. Guess what? There's all this noise and nothing happened. He didn't raise rates. The end.
Yeah.
But what Apple said today is they are going to be increasing the price of their iPhones by $200 to $300.
Yeah.
Because of the memory crunch that's happening.
Yeah.
So the price of memory is skyrocketing. Stocks like SanDisk and Micron have gone off the charts because of this. It is now starting to affect the hardware, and it's going to start affecting us. So,
and Apple has the most like pricing power out of any.
Correct.
Like they manufacture 200 million iPhones a year, right? Like it's not a small company per se, right?
Well, if they're raising, it's meaningful.
Correct.
Now that might be good or bad for Apple in the short term. I actually think it's meaningfully be better for Apple in the next 2 to 3 years.
Yeah.
As their hardware evolves, but what we know about companies is when they raise prices, when there's a crunch on something, they don't tend to lower them afterwards. So the margins might actually end up being higher a couple of years from now because of this.
I'm buying a new iPhone.
You're buying a new iPhone. Again, today I was listening to a couple of interviews. They're talking about this agentic, that Macs are on back order, that they're in biggest demand.
If Siri actually delivers,
don't do it, man.
Don't do it.
Don't do it.
Don't do it.
I've been saying if Siri delivers since 2013. I think it's so sad. And we watched the developers
Apple
conference,
Vision Pro,
and we're just like, the people with a Google Pixel are probably watching this, going, "You guys are so cute."
It's so cute. It's like 2016 for us.
this is it does some basic, and it looks cool, and it can do some things, but again, they're still very basic. To me, the hardware story, we've talked about this.
Yeah, I think Apple is just perfectly on time.
Yeah.
They waited for everybody to figure it out.
Yeah. They're the gatekeepers for vibe coding.
Yeah.
So they're going to do well. But I did think that the price increases of the iPhones and the memory, kind of goes in with this whole AI story, is that we don't think at the end of this, there's still such huge demand.
This is the beginning.
Yeah. So we think there's still several years left of this. Now, will there be pullbacks? Will there be setbacks? Will there be overbuilds and overspends?
I love that. Pullbacks and setbacks.
Yeah.
I love that.
Yes. And overbuild and overspend. You see, that's all just came up to me randomly. So, but it's important to maintain your eye on, right? The internet was born in 1992. Okay, it's important to note that.
Yeah,
we're still making money off of
2004.
Right, and we're still making money off the internet, quote unquote, in 2026.
Yeah.
So keep that in mind.
Yeah, long-term thinking.
That's how we do.
Right.
So thank you for listening.
See you in July.
See you in July. Maybe we'll do it. We're gonna do a 4th of July 250 year
100%. 100%.
Hopefully they'll still be in the World Cup when we do our next show.
100%. I am so proud to be an American. So,
there you go.
Let's go.
Love that. So remember, like and subscribe.
Yeah.
If you have any questions, please reach out to us. We're here to answer a whole host of questions, concentrated stock, and you want to talk about it, NVIDIA or SpaceX or whatever you want to talk about.
See you in July. Happy birthday, America.
Nice.